Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Wednesday, September 8th. I'm your host, Jesse Allen. Great to have you here with us once again. MarketTalkAg.com, that's our home on the web. MarketTalkAg.com is where you can find us. And we are so happy to have you part of the family. Find all of our streaming sources, our social media, everything online, MarketTalkAg.com. Well, joining us here today, our good friend Mike Zuzolo, Global Commodity Analytics, for our Wednesday update. We got a report on Friday. We had a fairly quiet trading day today. Let's bring Mike in here. And Mike, good afternoon. We were chatting a little bit before we jumped on air. For the most part, seemed like maybe some position squaring, at least in corn and beans, ahead of Friday's report. And overall, it was nice to see at least a mixed day and not red across the screen.
Yeah, very much so. And it's kind of nice to get a breather, especially after continuing on with the pre-holiday trend of a sharply lower market. When we came back from the holiday, I think many of us were like, is this what it's going to be like the next 4 days until we get the USDA report? A couple things I think is generating a little bit of tighter volume numbers and maybe a little bit of a drop in open interest here and giving the short covering the potential in the September contracts. Those seem to be the ones in the corn and beans, especially on Wednesday's trade, that allowed us to find a little bit more green on the screen, Jesse. And I think the main thing is related to Hurricane Ida. It's related to the idea that, based upon the Secretary of Agriculture's comments on Tuesday afternoon, shortly before the market closed, that he didn't think that we were going to take a big hit in the exports because of the hurricane. I think that probably created some potential new sellers to hit the pause button. And then the USDA ag attaché came out for China and talked about a 3 million ton increase versus USDA's current estimates on Chinese soybean imports. Here again, I think that maybe created some of the Hurricane Ida bears and some of the African swine fever bears carried over from pre-holiday trade to maybe hit the pause button as far as jumping in to new positions. I'm not sure we've lost a lot of the shorts. In other words, I'm not sure we've seen a lot of short covering at this point. I think it's probably more window dressing at this stage. And I say that because wheat is still my leader. And I say that because it's great if the USDA Ag Secretary is correct. I hope he is, but we continue to see out of a dozen or so grain terminals and export facilities in the New Orleans area remain offline because of power outages. It just begs the question, how long is this going to take? And I've actually read a couple stories today, one suggesting we're going to see a lot of movement away from New Orleans and over to Houston in order to get grain out the door, and also obviously the Pacific Northwest for soybeans, especially if the Northern Plains can get some cut here in the next couple 3 weeks and get them on the trains over to the Pacific Northwest. But this is still an ongoing supply chain issue, and it's not going to go away anytime soon, it appears to me. And we still have over 80% of our energy locked down at this point, or shut in at this point in time. And so I think energy's got to come online first, and then the grain terminals will, because it's all based upon power and it's all based upon storm damage. And I got to think that from a national security standpoint, power is a lot more important. And we're seeing that in the natural gas prices hitting 10-year highs, I think, or 12-year highs today. Part of that's expectations for good demand, but part of it has certainly got to do with Hurricane Ida.
Well, Mike, on the hurricane side and looking at exports, we've seen a bit of a softening of basis here, it appears, the last couple of weeks. Do you think we're going to see basis and spreads soon, start reflecting some of that effort by exporters to catch up with lost shipment time once we get back online? Do you think that's something we could see?
Yeah, I do think that. I think we've done most of the damage in the export market as far as cash basis and upriver as well. And I was actually looking at a couple key areas today before we went on. And, back on the 27th, around the 30th of August, before Hurricane Ida, The Davenport, Iowa bid was 30 over. It's now down to 50 under. So we've had an 80-cent slide in a week. So that is just 100% Hurricane Ida. And that's coupled with the fears that we're getting in the fields for new crop corn and bean harvest, but especially new crop corn. I've got several clients running at this point, and they're just getting started, but it really begs the question, if you've got any issues with getting old crop down the river into the export market and getting your bins cleaned out, if you're an elevator and a river terminal especially, you're really kind of shaking in your boots right now if you're still looking at 2 weeks out before the grain terminals open up at the Gulf of Mexico. That's really the heart and soul, I think, Jesse, of why I'm not really eager to jump in on the long side of this market, is because we've got harvest starting up and we've got the dollar breaking higher. So there's several reasons, and especially as I said a minute ago, the wheat leader that I utilize, that wheat has got to find a low, in my opinion, before the corn and beans, especially since we're just now starting corn and bean harvest, whereas wheat doesn't have that kind of pressure of harvest that it's got to go through.
Well, wheat was the downside mover on the day Wednesday, especially spring wheat. I know we ended up settling there down 12 to 14. It looked like last check I had there, and KC Chicago wheat lower as well. And you talk about wheat being the leader. You have an interesting correlation between wheat and copper. I'm going to pull up the chart on the video screen. Why don't you go through this with us and talk about it a little bit?
Yeah, I mean, if you go to the far left of that chart and you see where we were in the first quarter of 2020, well over a year ago, a year and a half ago, we noticed that those two assets, the wheat and the soft red, which is the purple line, and the copper, which is blue, they were trading opposite one another. In fact, almost exactly opposite one another. But by the time we got to the third quarter, or at the end of the second quarter of 2020, those two linked up pretty nicely, and that caught my eye. I started watching the correlation coefficients with those two, and it's really essentially been lockstep with one another, except for a couple small waves difference. But they've caught up with one another pretty rapidly over the course of a couple weeks. And I think what this chart really speaks to the market about, Jesse, is that we are not out of the woods when it comes to the inflation bull market, the commodity demand bull market. This is one of the main reasons why I was really never participating in a commodity demand bull market a couple, 3 months ago, that I thought it was weather and supply driven, because copper was pulling the wheat up, and it was because the funds were buying into the idea that we were going to have a tough situation with carryover levels, because the demand was going to come on, when actually it was really the supply side of the equation. And so this chart helps indicate why the dollar is so important, because the dollar going up usually tends to make these two assets go down. And as long as I see that kind of a relationship, it says to me the funds and the macro environment are not quite prime yet for a revisit to an inflationary mindset by the commodity funds. And especially given the time period we're going into right now with Egyptian tenders, including U.S. offerings. We had a big tender on Tuesday. We saw the business come across 300,000 tons, mostly going, or almost all going, to Black Sea, Ukraine, Russia, which was a little bit disappointing, but at least we were out there offering to sell wheat because of our price was right again. We're getting into the time of year, in other words, where we should have fewer competitors, especially out of the Black Sea. And I would like to see that wheat market take over as a leader to the upside again. But as long as the dollar continues to go higher, I think it'll pressure the copper, pressure the China bulls, and keep the emerging markets under pressure as well.
Mike, another thing that you talk about with us quite a bit is that pork and bean trade. I'm going to go to our other chart here that we have today. And, we look at the correlation here between the hogs and between lead month soybeans. And, really looking back throughout the basically since March, I would say, been pretty much parallel with each other. Talk about what we're seeing on this chart and some of the latest, some of your thoughts heading into the September WASDE report.
You really framed that really well, Jesse, because it's counterintuitive that they would be running so closely to one another going all the way back to February, March, when you think about the African swine fever, because you're either going to be shipping out more pork or more beans, depending on whether the African swine fever is going well or poorly for China in terms of their domestic hog herd. Because you'd think that if the African swine fever was going away, they would ramp up on their soybean imports to be able to crush more beans for their domestic hog herd that's being rebuilt. Not buying more pork. And so it's really interesting and runs counterintuitive that these two would be trading together, except from a standpoint that the trade, I think this chart shows this, the trade correlates and associates the hogs and the soybean trade with China, and how well or how poorly China is doing in terms of their ag demand and their overall demand and their overall economy to a lesser degree. So it's every bit as important, this chart, as the copper and the wheat chart. And when I see both these sets of assets that pretty much are opposite one another for the most part, or have very little reason to run together supply demand wise, when they're both doing the same thing, that really says to me that China is in a strong position in terms of how the funds look at the agriculture markets as a whole: copper and soybeans, hogs, and the wheat, since they've been buying more wheat as well, in fact importing more wheat. And so this is a very key element of 2021, and it's an important element to hold on to as we go into 2022 if we're going to try and get those old prices back.
Well, talking about getting those old prices back, Mike, we obviously have that September WASDE report coming up on Friday, and we broke it through some key support levels in corn and beans here recently. What are your thoughts heading into this report with the talk that we could see increased acreage and different number changes here from USDA, and where prices are at right now? Do you think there's still a little room for some downside pressure before there could be a bull correction? Or what are you thinking heading into this report, and what should guys and gals be thinking about with their positions right now?
Yeah, I think there is more room for downside. I think it'd be mainly futures based though, because as we discussed, Jesse, the cash basis has already fallen to pieces because of the hurricane. So I think the futures and the length of the funds, that they're still heavily long for the most part, not so much in soybeans, but they're still fairly long in the ag space, and especially in livestock, and to a lesser degree the corn and the wheat market. But I think this is where it goes back to what we've talked about a lot this year, is between the basis being very ugly and that impacting negatively the new crop basis. I'm not a cash seller here. I am a put buyer here, with the idea that we can find some support, or at least find a low in this market as we get closer to the stocks report at the end of this month. Maybe it comes right after the report, but that's going to have to be predicated upon USDA. And it's going to be a tough sled and a tough hill to climb to get a low right after the USDA report, because again, we're just ramping up on harvest, and we have the dollar making fresh 2-week highs. We also have the hurricane element still, going to be with us at the end of this week, unless we get some really great news that we're going to start shipping out. But I cannot exclude from the idea at this point that we're going to have some cancellations, or we're going to have some washouts because of the Gulf, or we're going to have maybe our sellers, our exporters at the Gulf of Mexico declare force majeure because they've got an act of God with this hurricane and they just can't get the shipments out. We can't get out from underneath that potential rain cloud right yet. I'd feel a lot better a week from today if we can start hearing about the port opening up again and the Gulf opening up again. So the report, I think, is slanted towards new lows because it's all over the place as far as, are we going to get bigger acres, lower demand, and a bigger yield? And if we get all three of those, I don't think the market's got that priced in quite yet.
Mike, let's flip over to livestock here today. And it just seems like this market, the last couple of days, we tried to trade higher early in the session, and then we fall off. Cattle were down moderately today. And we did see some activity in feedlot country, though. We saw, steady $2 higher. So, I mean, walk us through this cattle market and your general thoughts here as we near this report on Friday, and just the tone in this market. Has anything changed here in the last week or so?
I think what's changed since you and I spoke last was, I think I was talking about pulling off some hedges, that the market was very well balanced. But then all of a sudden we had a situation where the equities markets took a nosedive, and we had a situation where the dollar shot higher. That's a red flag for the consumption. I think one thing that and I addressed this in my most recent copy over the weekend, I started my 2022 livestock forecast for prices, and I'm looking at better prices than USDA is forecasting for 2022, Jesse, by about 3 to 4%. So it's a lot higher, relatively speaking, for producer prices. But I think that in the short term, We have a situation where if the equities go lower and the dollar goes higher, I think the funds who are very, very long are going to be very sensitive to that the consumption issue is still an issue to have to contend with, especially now that we're out of grilling season. And I've made this point to several others, and I can't reinforce it enough, but you have a lot of Asia, Australia, China, the Philippines, several other countries having a zero tolerance policy towards COVID. And I think that's really hurting their economy and really hurting their consumption. I'm not saying it's the wrong thing to do. I'm just saying the bottom line is if you're going to get zero cases of COVID, especially with the variant like the Delta variant, you're probably going to have to shut everything down. That means no consumption. And I think that's what the market's very sensitive to now, especially after last week's jobs report here in the United States. The enthusiasm of the global economy going into 2022 is a lot murkier now, and that enthusiasm's cut way back, I think, because of what's happened in the jobs numbers and some of the other economic data in China. And I think this is where the trade's getting it right. They probably had a bubble in the financial markets, but that's going to impact us in the livestock as well. And with higher retail prices, we're going to be extra sensitive in our export market. That's a big point I try and make in 2022. If my prices are going to be higher than USDA's, it's going to be because we export more. We don't have to worry about domestic backwash of supply.
Mike, another thing as well, I wanted to get your thoughts on some reports of mad cow disease in Brazil in beef. How much do you think that could play in to our market trade here? It doesn't seem like it's a huge issue at the moment, but we know Brazil's been there before. We know it could become a bigger issue. What are your thoughts on that?
Brazil has been a very big player in the Chinese beef market this past year, and the USDA's livestock update out of China from the attaché shows that very clearly, Jesse. And so I'm glad you brought that up, because that is kind of a great example of what I'm talking about, is that we are in a very sweet position to export more out the door if something like a mad cow disease would happen in another country that exports to one of our main countries like China. And we still have an Australian beef market that is trying to rebuild. So these are the types of things that I think really set us up for a nice, steady increase in 2022 for beef exports, because we need those, because I think our retail domestic demand here in the United States is going to flatline, if not slip a little bit, because of these higher prices.
The hog market seems like it's been showing some greater support here lately, although it did falter late today as well. But I would think hogs probably kind of the same story, just with the worries about COVID and domestically here. We're probably going to see some pressure in this hog market continue as well.
Yeah, I think this is where the funds versus the fundamentals come back into play, is that the pork and bean trade is very much alive and kicking. And I think the pork cutout getting back up to around 110, 112 today, and finding it looks to be like a seasonal low maybe, that's really, really nice, because if it is, then the CME cash index trading just under $90 should have a window of opportunity of increasing $5, maybe even $8 at this point, and really supporting the front end futures market at this critical time period. But I think the key with the hog market continues to be getting those shipments out to China. As long as we have export shipments of 30,000 tons or more a week, I don't think there's a lot of downside in the hogs other than just fund related downside. But then I think that lasts relatively short period of time, and then we come back to the fundamentals.
Mike, briefly, any other final thoughts you have for us today?
Yeah, the big thing I'm going to be working on, please go to globalcomresearch.com and sign up for trial, because this is going to be coming out relatively soon. The big thing I'm working on right now, Jesse, is after that jobs report and after the Fed's beige book minutes that came out just today, I do not understand why they would want to taper right now, because we've got a supply chain that is worse than ever in terms of a kink because of the hurricane and because of what's going on over in Asia with COVID. So I don't think they'll want to take away the punch bowl too quickly like the market's thinking. If that's the case, it may induce some inflationary pressures as we get into the fourth quarter, and that would be something to lay for as a grain and livestock hedger.
Well, you can learn more. Check out the free trial, globalcomresearch.com. Mike's got a new logo. We should share that as well. It's looking good, buddy. Appreciate the time. Thanks for joining us here today on Market Talk, sir, and have a great week.
Thanks, Jesse. Have a great week, and thanks for having me.
Mike Zuzolo with Global Commodity Analytics, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Wednesday, September 8th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.